Hello, what if I told you that at the peak of the tech stocks boom last year, a tech company went all the way to the moon and hit a high of $46 before losing 93% of that valuation to where it's trading at today at $3 and barely some change? What if I told you that company is Skillz? And 5 months ago, back in October, I did my first deep drill into Skillz stock when it was trading at $8 before proceeding to rebound to test a $13 resistance level, representing a 60% return in 1 month. But then the stock just tanked and fell off a cliff all the way to where it's trading at today at $3. Now, what are the markers telling us? Was the recent earnings call which saw the stock gap down big a sign of things to come, or is the stock completely oversold right now? And is it likely to reverse and reverse big in the coming future? Stay tuned for a quick drill and more. Keep it simple. Well. Here's a quick intro for those who don't know. Founded in 2012 by CEO
Andrew Paradise, the CEO and founder of Skillz.
Skillz is an online, mobile, multiplayer video game platform that is integrated into a number of iOS and Android games, and players use it to compete in competitions online against other players across the world. Skillz went public in December of 2020 after merging with the SPAC Flying Eagle Acquisition Corp, who is headed by founding investor Jeff Sagansky and chairman CEO Harry Sloan, who also were responsible for taking DraftKings public. So going back 5 months ago, what formed the basis of my bull thesis for Skillz stock for long-term exponential growth? Andrew?
I can't speak specifically to why the short sellers out there decide to target us. Yes, absolutely, it's a real thing. I'd say even more broadly, these short reports, they have numerous errors.
Now, it's actually quite interesting. The short percent on float has gone down ever since my first drill, and it's today at 18.81% according to Fintel. But don't be fooled, this is still a ridiculously high short interest. And what's further to this is we are exhibiting the same traits across most of the tech stocks that have all been bashed down big, and that is the dark pools and the short volume ratios, which have been through the roof. Look at this. 51.96% yesterday and 42.33% the day before. If, like me, you've had enough of these dark pools, then why not think about opening and switching to interactive brokers who do not engage in payment for order flow, period. This on top of their superb trader workstation platform and zero holding fees means you can safely park your long-term investments with peace of mind. If you have never heard of interactive brokers, then please click the link right here or in the description below. Now, why are these critical? They're critical because on the 16th of March, on Wednesday's trading, Skillz stock popped 27.19% in 1 day, followed by another 5.52% yesterday, meaning that from the 15th of March to today, the stock has ignited 42.99% in 3 days. Holy jeez. What does that mean? There is only one thing in my mind that is pumping the stock right now, and that is the shorts are covering. And it's very clear when we take a trip down memory lane. As you can see, back in February of 2021, the short percentage on stock was at 6.5%. Now, this is considered big, and you can see that for the rest of the year in 2021, the short volume just keeps going up. It went up to 30.9% in May of last year, and it has literally stayed in the 20% or above bracket until now, while the stock price has been literally pummeled down to $3 and change. Are we at the point where these short sellers are on the verge of getting margin called based on the wider market issues at hand? Were the Q4 and full year 2021 results that bad? Well, I don't think so.
For the fourth quarter of 2021, we achieved 61% year-over-year revenue growth, driven by 56% year-over-year growth in paying monthly active users. For full year 2021, revenue totaled $384 million. This represented an increase of 67% year-over-year.
Now, those numbers may seem big, but they actually missed their own guidance. So is there any growth and growth potential in the mobile e-gaming world?
Our first sector, mobile gaming, has been and is projected to be the fastest growing segment of the global gaming market at nearly 3 billion gamers worldwide and growing. As a sector, mobile gaming expects to reach 160 billion by 2025.
As we covered earlier, the mobile gaming market is over $90 billion in size today, and it's still growing. In fact, it's expected to grow to $175 billion by 2026, according to Statista.
This is a huge target addressable market.
Driving high revenue growth while also scaling the organization at the same time, it came at a cost to our profitability. So while we achieved many of our goals, we didn't achieve all of them in 2021. In particular, we fell 1% short of our full year revenue guidance of $389 million, and we ended Q4 with a $78 million adjusted EBITDA loss.
Now, I'm not so concerned, if I'm being honest, about the revenue miss. But why is the EBITDA negative?
As a result, our expenses have exceeded revenue to date. Excluding the investment in user acquisition to grow our base of gamers, our adjusted EBITDA has been positive.
There you have it. So, they're basically spending a lot of dollars to recruit users, either via cash bonuses for signing up or other incentives. Now, if this continues, we're not going to get to profitability. And will it continue?
To restate, our primary focus the last several years, and especially in 2021, has been investing aggressively for growth, and we have been successful on that front. All this investment has helped build a strong base of users, content, and talent, but it has impacted profitability, as you can see from our adjusted EBITDA margin chart. This year, we'll no longer be focused on GAAP revenue growth at all costs. We have an increased focus on growing revenue after engagement marketing, as we look to reduce ineffective forms of engagement marketing.
There you have it, from the CFO himself. So this year, they will be driving down all costs. So I see this just as any other tech growth stock, as phase 2, where the company itself has grown to a certain scale that its next driving factor is to achieve net profitability.
In 2022, we're shifting our priorities to be hyper-focused on more profitable growth and activating the many new Skillzonians who joined us over this past year.
And just like any other successful growth tech stock out there, it is at this stage where the company, the management, drive forward the road to profitability. And when they do achieve that moment and that point in time, the stock price will already have exploded to reflect this. So is now, being a Skillzonian myself, the time to load in more shares? Well, the wider market sentiment is still very volatile, so please tread lightly indeed.
And our target is to reach adjusted EBITDA break-even by the end of 2024.
Well, you may be thinking that's a lifetime away, but by 2024, will Skillz still be trading at $3 and change? I don't think so. And this projection doesn't factor in the secret weapon, which they revealed in their Investor Day presentation.
When we launched 10 years ago, mobile gaming was the runt of the video game sector, with investors asking, why weren't we building for computer or for console? Today, mobile is the majority share of the games industry at over 90 billion. We had the foresight back in 2012 to build for where we are now, and that's why I'm so excited to unveil a new technology that we've been developing in stealth over these last 2 years. And here it is.
To summarize, I think this year will be big in seeing the transformation of Skillz from an explosive growth company solely based on getting users to an actual company looking to grow its profitability for its shareholders and its company moving forwards. So the first few earnings calls should put this trajectory in line if they deliver what they're saying right now. If this happens, I do see the stock easily doubling or tripling by the end of the year on its current valuation and stock price. And the cloud could actually be so explosive it could send Skillz to the next level, in my opinion. And factor in, I think, as with any strong tech company in recent history, founder-led tech companies have the edge, and Skillz has that in Andrew Paradise, and now he has also surrounded himself with top hires from different companies to support him in his management team. I think Skillz is positioning themselves very strongly to grow in the near future.
Some of these notable executive hires, they include our Chief Product Officer, Vatsal Bardwaj. He came from Amazon. Our Chief Financial Officer, Ian Lee, who joined us from Airbnb. Our Head of Marketing, David Eisenberg, who joined us from Ticketmaster. Our Head of People, Doris Fritz Bianchi, who joined us from StubHub.
So leave me a comment as to where you think Skillz will go this year. Thanks for watching, and please note, I am a Skillzonian, and I am very bullish on Skillz long term to grow and excel in the e-gaming platform industry. So please take this reel with precaution and always do your own DD. If you enjoyed this video, give it a thumbs up and subscribe for more, and we'll simply see you in the next one.